Hi there. As you might have heard, there's new mortgage rules that are coming into effect as of January 1st, 2018. But before we get into the new mortgage rules, let's talk about today's current qualification rules. Let's break it up into two portions. So the first portion is for buyers with less than 20% down payment, and the second portion is for buyers with more than 20% down payment. So for the first group, which is the 20%, or I should say less than 20% down payment, there is no change. Today's rules still apply moving forward into 2018, which is they have to qualify using the posted rate regardless of the mortgage product they choose. So whether they choose a 5-year fixed or a 5-year variable, they have to qualify at the benchmark rate, which happens to be 4.89 in today's based on today's interest rates. Okay, now let's talk about the second group, which is buyers with 20% down payment or greater. So again, there's two sets of rules, if you want to call it A and B, for that specific group. So today, if somebody has 20% or more as a down payment to buy a home or investment property, they qualify based on the posted benchmark rate if they choose a 5-year variable product or any fixed product less than 5-year term. So that's no change there. The group B, which is 20% down payment or greater, and they're choosing a 5-year fixed, this is where the change comes in. Today they can qualify on the contract rate. So let's say they borrow at 3% 5-year fixed, then they qualify at 3% 5-year fixed. In 2018, or January 1st, 2018, that subgroup, so 20% down payment, choosing a 5-year fixed product, they would have to qualify at the higher of the benchmark rate or their contract rate plus 2 percentage points. So what are these changes? What do they really mean? There's three takeaways that I wanted to share with you. One is there'll be a rush of buyers who will try to sign contracts or firm up deals in the next 6 to 8 weeks, trying to beat these new rules kicking in January the 1st. The second takeaway point is this actually could be an opportunity for real estate investors, because if some of these buyers get pushed out of the market and now they can't buy or would have to wait on the sidelines for a bit longer, that could create rental demand for these rental units. So again, this could be an opportunity for real estate investors. The third point is no one really knows how big this change is, because it's only the banks that would know what portion of their 5-year fixed clients that are completely stretched out would be impacted by this new rule. So is it, out of that 5-year fixed group, is it half of those buyers? Is it 20%? Is it 30%? No one really knows. What I think will play out in the after January 1st is there'll be a bit of a cool off, people trying to understand how this would impact the market, but things will just come back to normal. It's typical thing that I've seen with whenever there's new mortgage rules, new government rules, the market pauses, people try to figure out how this is going to impact them, and things will come back to normal. Please feel free to reach out if you have any questions. I'd love to help you out, or connect with your banker or mortgage broker, and I'd be more than happy to answer any questions you might have. Thank you so much and have a good day.